Welcome to the Winpe Ignite PEVC Career Talk Series. We are ready to start, and a message to those participants whose Zoom name is not on a registered participants list. Please update your Zoom ID to match the one you used for registration, or you haven't, or in case you haven't registered, please use the link that we will be posting on a chat box to do so that we have your name and your details on our database as well. For those of you who don't know us, Winpe is a pioneering, not-for-profit platform driving gender diversity in the investing ecosystem by increasing women's participation as investors, capital allocators, and recipients of investment capital. We work closely with PEVC firms in helping them shape and execute on DEI strategies, including hiring more women across roles and levels. When we launched in 2020, and we heard our member PEVC firms saying, we want to hire women, but we can't find them, we were skeptical because we thought there are enough women keen on PEVC careers. In the last more than 4 years, Winpe has undertaken a number of initiatives aimed at supporting PEVC aspirants, including job bulletins, AMAs with industry leaders, boot camps with recruiters, and career fairs. Through these initiatives, we have also come to realize that the talent pipeline of women for PEVC is much thinner than we would like for various reasons. Ignite by Winpe is where we are consolidating various resources designed to develop the female talent pipeline in the PEVC industry. Ignite offers sessions and training focused on developing the necessary understanding of careers in PEVC, skills required, strengthening CVs, and understanding the various career tracks within the PEVC through the experiences and insights coming straight from the industry. Our intent is to have candid conversations that offer real practical insights to help you take your first steps into this industry. Today's session will be followed by a series of masterclass also starting in January 2025. Please join the Winpe Career Network WhatsApp group to keep yourself updated on our sessions and receive information on job openings, which we keep posting there. I'm sharing the group link on the chat box. When you join this group, you also get the ability to join the Winpe Ignite profile repository, which Winpe shares with our 30+ member firms whenever they are hiring. So you are a part of our database. And you can take advantages of the opportunities that we offer. Moving on to today, our topic for today is navigating the path to PEVC, preparation and experiences in the industry. We have an incredible panel of professionals today who will share their journeys, challenges, and the lessons they have learned along the way. Before I introduce our panel, a reminder that if we do not find your name in the registration list, we will have no choice but to remove you from the webinar. So please either update your display name or fill out the registration form in the chat box. Introducing our speakers, Arpita Gujrati. She is a senior associate at Lighthouse, primarily working in the healthcare sector. Before joining Lighthouse, Arpita was part of Kotak Investment Banking, where she worked in the M&A team. Arpita is a chartered accountant. Atul Gupta. Atul is an associate at Multiples, where he focuses on investments in tech services and software. Prior to this, he was a founding member of a SaaS startup in healthcare. He holds a bachelor's and master's degree in technology from IIT Bombay and an MBA from ISB Hyderabad. Kanakvi Aggarwal. Kanakvi is growth stage investor at Peak 15 Partners, where she focuses on enterprise AI software and consumer investments. She is deeply passionate about technology and on the lookout to partner with daring founders trying to make a dent in the world. Previously, she was a management consultant at McKinsey. She graduated from IIT Kharagpur, majoring in ECE with a minor in CS. Tamanna Khan. Tamanna Tamanna is a part of the private markets team at NIIF, National Investment and Infrastructure Fund, for the last 5 years. As a part of her role, she invests in private equity and venture capital funds in India. Prior to NIIF, she has also worked with JP Morgan for 9 years across private equity, fund investments, and fixed income. She has an MBA from IBS, Mumbai, and has cleared CFA Level 2 exam. Now coming to our moderator, Shweta Laddha. Shweta is the Vice President and Head of Compliance and Secretarial at Multiples Alternate Asset Management. With over 15 years of post-qualification work experience spanning diversified areas across BFSI and have worked with all financial sectoral regulators in India. She is a company secretary, LLB, and MBA with specialization in finance and marketing, and has worked with companies including NIIF Infrastructure, Finance, and Aditya Birla Capital Group. She was recently awarded as 40 under 40 alternative investment professionals in India 2024 by Equalify. Now, some housekeeping rules. The session is being recorded and an edited version of the recording will be made available for future reference. You can type your questions anytime during the session. The panel will pick up the questions at the end of the session. Now, without further delay, let's get started. Over to you, Shweta.
Thank you, Ankita, for lovely introduction. And good morning, everyone. Welcome to Winpe Career Ignite series and our panel discussion on navigating the path to PEVC. My name is Shweta Laddha, and I'm honored to be your moderator today. We have an exciting and insightful session planned, focusing on the unique challenges and opportunities for professionals in the private equity sector. And as Ankita has already introduced our panelists, who are young and very successful PEVC professionals, I would like to start our panel discussion. I just can't wait to listen to our panelists. To start with, I would like to ask each of our panelists to share their journey into private equity. What inspired you to pursue a career in this field and how did you prepare for it? Atul, would you like to go first?
Yeah, sure, Shweta. So, I was always interested in finance during my engineering days at IIT, and the first job that I had was in finance. And after 2 years into finance, like most of my batchmates at IIT, I also wanted to build things hands-on, and then joined a startup as a core team member. And that was a good experience for me, building technology product hands-on and launching it in the market, scaling it to a certain ARR. But that couldn't take off during COVID period, and then that's when I thought that I will pivot my career into buy side, combining both my operational exposure that I had over the last 2 years and also my interest in finance. And I went for my MBA and used MBA as a pivot to move into private equity, and that's how I got into the industry post MBA. And what really works for me is that given the fact that I have exposure into building technology hands-on, that helps me you know provide different perspective into the evaluation that I do in technology services and software at Ripples.
Super. Kanakvi?
Yeah, sure. So back when I was in college, I used to do a lot of coding and I was actually into AI back then. At the time when I was graduating, I took the call that I didn't want to be a developer. I wanted to explore the business side of things. So I joined consulting. I was at McKinsey. And I remember working with clients like clients in mining, clients in consumer, clients in FS, and I never really felt very excited about their business. And then there was this one study in which it was a client who was trying to understand, and no points for guessing who it is, wanted to understand why they're losing share to Zerotha. And that was when I was, kind of really exposed to the world of startups and how a few great founders with few great ideas can come in and truly disrupt a really large business and carve out a space for them. Through that study, I got an exposure towards everything that was happening in fintech across the world. I studied a lot about startups at that time, and I decided that given my background in technology and me always being excited about those things over maybe traditional businesses, and then having the chance to combine what I was learning at consulting around working with businesses, trying to understand businesses, that works really well with investing. So I thought VC would be a great career choice for me. Fortunately, when you're in MBB, there's also a very clear path to going into a VC. There's a very structured process where headhunters reach out to you maybe 8 to 9 months into your stint for interviewing with all the funds across PE and VC. So I took the call to start preparing and sat for, it was called Sequoia India at that time, and luckily got through. So I've been here for now 4 years.
Wow. Arpita, would you like to go next?
Sure. So mine is a pretty boring kind of journey. I am from IB. So IB to PE is considered like a natural transition. Like Kanakvi said, headhunters reach out to you and then you apply. It's mostly merit based. So whatever skills you have learned on the job, you apply those during the interview process and then you get through it. But what has really worked for me at private equity, and I choose to stay here for longer time as till the time it permits me, will be the depth of the work that I'm doing and the breadth of the sectors that I'm covering here. So that is really motivating me to just a constant learning motivation that's coming. So yeah, been here at Lighthouse for 2.5 years, so it has been great till now.
Superb. Tamanna, now coming to you.
Sure. Firstly, I would like to thank Winpe for this wonderful Ignite series that actually will be helping solve the problem that we are looking for. We actually see a lot of less diverse candidates in this industry. So this will help us have more women candidates in the industry. Coming to my journey, I always was fascinated with money and savings. So investing was a natural choice coming there. So I did my MBA and got started with fixed income. So I was not quite sure which asset class to pursue, but after I had 4 or 5 years of experience in fixed income, got an opportunity to choose between hedge fund or private equity. I chose private equity based, given that I was looking to get an overall experience from the entire journey and a life cycle of a company across sector and across spaces. So that was more interesting, and I made that plunge to get into to start private equity. But obviously, before I took that decision, I had also started preparing myself. I was already an MBA, but and 4 or 5 years of experience by then, but started doing CFA to get my foundation more stronger. That helped me clear the rounds and the interviews for the private equity role that I was offered. So that's about getting started into private equity.
Superb. So one thing which we can conclude is MBA really helps. That's right. All right. My next question would be to Atul and Arpita, that what are the most important skills and experience areas should candidate develop to break into PEVC world, both from a view of making it through the recruitment process and also from a view of thriving in the investing roles?
I can go first. Yeah.
Yeah, okay, sure.
Okay, yeah. So I think there are two sets of skill set that is important on the buy side roles. First will be the technical skill set that you have, and that will depend on the stage of the fund that you're operating in. My sense would be that as you get into more of late stage private equity ecosystem, the expectations from you in terms of technical skill set and the Excel modeling and just the financial skill set will be more than what you will find at, let's say, early stage startups, because just the nature of the companies that you deal with and the established nature of the industries that you are working in. So having a very good handle on your the ways around Excel, how fast you can build a three-statement model and so on, and also good handle of accounting concepts, return concepts, etc. And the other skill set in my mind is very important is articulation, because on buy side, it's very important for you to articulate your thought process clearly, whether it's in the recruitment process or when you're, working day to day on the job, whatever your opinion is on the company or your thought process on any trend, any industry, any company. I think your ability to articulate it appropriately differentiates you, and I think that will, make the journey in the ecosystem quite smooth.
I mean to say courage to speak up whenever you feel.
Yeah, I think, I'll just elaborate a little bit on the technical skills. So, financials, obviously, knowledge about key financials is very important. And then moving on to the financial modeling skills, I feel that it's really, really important at every stage um, because that is how it's a skeleton of how the company is run. That's what I feel. So, um, I would suggest learn it, practice it, take external help if required. But that's really important to hone at that at the particularly at the recruitment stage. Then moving on, how what I suggest people is also having a point of view on 1 2 sectors you've worked on. So you must not be from a IB background. I myself was not aligned to any one sector. I was most part of my experience was in the compliance field, but I got myself exposed to the sectors, having a point of view on what type of businesses work in. It could be consumer is one sector, but F&B, like I took for me it was F&B. So F&B, how is the industry structured? What are the key players? How is one business different from the other? So and which business which type of business model do you think will thrive in the industry? Those kind of nuances on a sector, 1 2 sectors only, but these really help. That's what I suggest people. The other common type of question that we get asked in the interview process, particularly, is one stock would you recommend from a public market perspective? Having a really clear rationale of why you want to pick up that particular stock really helps. It just helps the interviewer gauge the thought process that you have. So that is very important in my view. And once you are in the investing role, I think everything, all the things that I've said above, and I'm sure Atul would agree to it, would be just combining everything in one and taking it in the background, because there you have to really build on what the technical skill sets are. And by building on, I would maybe take one anecdote of what we just like two simple line of what we do after coming in the investing role. It's like when we analyze a company, we get into the shoes of the entrepreneurs and answer those 3 4 questions of relevance and growth, and then moving on, corroborating all those facts with the customers, talking to various customers. So this is just 2 line summary of what we do, if I am right. So how that is what you have to do. And but what skills would help you to do that would be, in my view, like Atul rightly said, articulation will be at a second stage, but for me, one first would be communication, like it, right from starting to talking to the entrepreneurs and the customers. Oral written communication, that will really help. Clarity of thought is very important. Then um, uh, in my view, yeah, curiosity and be ready for constant learning. These are some skills that I could think of would really help to navigate through while you are in the investing process.
Super. So developing or building financial skill set, modeling, technical skills, that is basically the financial and modeling skills, and having point of view on one or two sectors, and articulations are key takeaways. Super. My next question is to Tamanna and Kanakvi. As we all know that networking is crucial in PEVC, what are some effective strategies that you have used to build meaningful connections in this industry? And also role of mentors and sponsors in this industry. How can one find these mentors and sponsors in this industry?
I'm happy to go first.
Yeah.
When it comes to networking, I think there's multiple ways you can do it, and there's no one thing that fits everyone. I've seen people who are, out there meeting everyone, taking like 20 meetings a day. I've also seen people being successful who have maybe 4 or 5 trusted partners in the PEVC space who they can truly go to jam with about ideas, etc. So it really depends upon your style. I would say when you think about networking in PEVC, maybe in the earlier stage, it's a lot more important, especially when you come in. To start with, maybe in later stages, especially in PE, it might not be that helpful. But having people skills is certainly important. But given that I'm in the growth stage, which is somewhere in between early stage and PE, what I found to be really helpful is just talking to all the investors around you, and these would be people that you might have known from your college. These would be people who you would have maybe worked with, especially for me when I was in consulting. I had people around me who had gone to other funds. So one great way to start out is you can just do cold LinkedIn reach outs to any investor, and they are more than willing to write back to you. Now it's upon you, when you're going into that meeting, to make it useful for them and to yourself, so that both of you feel when you're walking away from the meeting, feel that you've learned something new and gained something out of it. And then depending upon your style around whether you want to have multiple many shallow or transactional relationships, or do you want to have very few deep relationships, you can think about how you want to follow up with each. But that's completely your style, and there's no one right way of doing it at all. When it comes to And that's how you slowly build your network, and it's also organic. Like now I work with say 4 or 5 companies. There are other people from my peers who are also on those companies from other funds, so we naturally start talking to each other. So it's also an organic build over time. When it comes to sponsorship, I found that, of course, like mentoring, and this is a business of apprenticeship. Like absolutely, you need a mentor or a sponsor who has your back every day. The thing about this business that most people don't realize when they're joining is that the feedback cycles are very, very long. You're not going to know till 4, 5, 10 years whether the company that you invested in or wanted to invest in is going to be a successful company or not. So you need to have mentors who are able to tell you that these are the skills from their experience that they've learned. These are the lessons that they have learned throughout their journey that you have to go through as well. And they can give you a answer around whether you're tracking on them or not. And these are typically people that I found you'd find in the fund. So make sure that when you're applying to PEVC, you're a little bit clearer about whether you want to do early stage VC, whether you want to do late stage VC, or whether you want to do PE, and what aligns with you and what aligns with your personality and your interests. And then within those funds, do you see a partner or someone who's excited, who you would be excited to work with? I think that would be the easiest way to solve for it. Over time, though, once you're here for some time, you can, of course, form great connections also with, seniors and other funds that you happen to, meet and happen to connect with. So those develop over time organically, but I wouldn't fuss about it at the start.
Tamanna, would you like to go next?
Sure.
Yeah.
So Kanakvi has covered most of it, but I would just like to add few more points. So PEVC industry in India right now is maturing. It's very, like, it's still early is what you call. So the industry is a close-knit industry. You can actually get to meet most of your people through some events or conferences that happen. Like Winpe is one of the forum that you can interact with many of the people in the industry. Especially, I think if you attend 2, 3 Winpe events, you end up meeting almost more than 50-60% of the women female participants that you would see in the industry. Outside of that, also there's IVCA, which conducts events, conferences. You can build your network through that. That is something that will help you at least get started. Networking and mentorship is important. It's an enabler. Outside of that, also, I would like to just give you an advice that choose your mentor with a value system which aligns with your value system, because that actually helps you see a long-term career goal, and that person can navigate help you even if the person is not from the same sector or the same field. I think even if your value systems align, there would be, any professional would have faced challenges and would have navigated their professional journey. Their experience will help to help you navigate how to navigate your early part of your career through that. So choose someone whom you can align with. And from a sponsorship perspective, I think the best thing is to be vocal about and have a very strong relationship with your immediate manager and team. So that will help you talk about your requirements, your need, flexibility, etc., whatever you need at that particular stage. And I'm sure people will work it out. So be open and speak up is what I would say. And first, tap onto your immediate network, which is your team and your manager. And then, yes, mentorship is obviously important and enabler, but just tap onto everything that's available with you at that point of time.
That's great, Tamanna and Kanakvi. So before I start, I have my next question. I would just like to tell that to our audience that if you have any question, please put it onto chat box. We'll take at the end of the session. So my next question is for Atul, Tamanna, and Kanakvi, that what are the different career tracks in PEVC industry and how can one identify the path best suited to their skills and interests? So even apart from investing, and in investing, there must be a lot of other career tracks. So would just want your inputs on that.
I'm happy to go first and talk about investing. And I'll leave maybe, the fund of fund and the other things to other participants. But within investing itself, within the core role of investing, the way that I think about the industry is there are three that I touched upon earlier. One is early stage investing. The second is growth investing. And then the third would be PE or more later stage investing. In terms of when you're thinking about what is really exciting to you, I would say there are maybe two core skills that you need as maybe three core skills you need as an investor. One would be curiosity. Now that is just very horizontal. Whether you're an early stage investor, late stage investor, you need it. You need to be able to wake up, want to read a lot, whether it is about what is happening on AI models, whether it is about what is happening on fintech in US. You need to be able to read a lot and distill a lot of that information. The second is just evaluation or having a point of view. Now, within that, you could need more of, say, first principles thinking. You could need, maybe like a dream gene, or you could need financial modeling. That depends upon what you enjoy as a person doing a lot more. Do you like the financial modeling aspect of it, working with numbers into an Excel? Then maybe think about PE or later stage investing. If you don't really derive energy from it and you typically like to be more, first principles thinker who's thinking about how the world can change and just bringing on to your dream gene and how you think the world should evolve, then maybe early stage investing could be more exciting for you. And then the third aspect of it is just people skills. As you grow into any industry, any business is a people business, so you need that. But just to get started with, because networking and sourcing is important in especially early stages, if you do like to meet 20 people a day, if you like going to events, if you're very like extroverted and just natural people person, then maybe earlier stage is better. In growth or later stages, you do get to have good relationships, but it's not mandatory to go out there and to do sourcing. And the people aspect might come a little bit later on. So depending upon all of these three, where you lie in terms of your personality, your interests, you can pick between doing the fast pace, meet a lot of people, think about very new industries or tech related disruption in early stage, versus the other side, which is doing more of mature businesses, but really digging into a company, spending like 3-4 months with them to understand what is the path forward from them, doing a lot of financial analysis, spending a lot of time in Excel data, etc. That would be maybe the skill that you need in later stages. So depending on that, you can choose.
Yeah.
Yeah, Atul.
Yeah, nicely answered, Kanakvi. So I'll take it from there. I mean, so Kanakvi explained about early stage, and I'll cover more from private equity growth and buyout investing. So even in late stage, right, you can do both growth and buyout investing. Certain funds will specialize in buyout investing, and certain will more specialize in growth investing. And there are funds such as Multiples, General Atlantic, etc., which will do both growth and buyouts. Now, I'll talk about growth first because that's where I started my career in at Gaza Capital. And so what growth allows you to do, and growth is also a spectrum of it's a spectrum of investments, right? So you can do a growth investment into a company which is just at a Series B, Series C stage, and all the way up to a very mature company which is looking to dilute certain percentage for maybe primary fundraise or a secondary capital raise. So depending on where you're operating, let's say if you are more in the early growth stage, right? Maybe Series B, Series C, that is a good mix of a, more of a flavor of sourcing as well as little bit of financial analysis as well, because you have enough data on the company to do some analysis on, and maybe the industry has also evolved to an extent uh, that you can build a hypothesis about the industry going forward, and you can also see how the industry has evolved to that point in time. So if you are a person who likes to do both, want to have a mix of both financial hard skill set on the job, as well as have a more flavor of sourcing as well, and in touch with more early stage and upcoming ideas and upcoming industries, I think venture growth or early growth could be a great point of entry for you, and something that you will really enjoy. I think from a buyout investing perspective, you really have to invest a lot of your time on one asset itself, because what buyout means is that the fund is taking, effective ownership of the company, whether it's 70% or 100%. So you run the business effectively. You appoint the management, or you are supporting the existing management in achieving the business objectives. So if you are as a person who likes to get very operationally involved in the business end to end and want to go there very in depth into a particular company, into a particular industry, then buyout could be very rewarding. I personally really enjoy working very deep into one company, and because of my own operating experience, and I think buyout really works well for me because I really enjoy the day-to-day conversations with the CEO, and really, executing, like a chief of staff as well. And along with that, you are also an investment professional at the same time. And also, you are an owner of the financial plan that you underwrote at the start of the investment, because you are a buyout investor. And obviously, as Kanakvi said, buyout investing and lead investing will involve a lot of financial analysis, a lot of financial engineering. So if you are someone who thoroughly enjoys Excel modeling and really getting into numbers, identifying things such as sources of IRR and so on, I think buyout investing and late stage investing could be very rewarding. And apart from investing roles, you have operating roles as well within the PEVC ecosystem, wherein um, you know where you work with the company on a day-to-day basis and help them achieve their business goals. So those will be more like internal consulting roles, in which you are acting as a consultant to your portfolio companies, helping them achieve long-term business transformation objectives. So those are other tracks within the industry as well.
Thanks, Atul. Tamanna, from FOF perspective.
Yeah, so Atul and Kanakvi is given you from a GP, which is a fund management perspective. I'll touch base the other aspect of fund manager, which is an FOF. Basically, what an FOF does is we are an investor in other funds. So and it's a very unique position where you are a fund manager as well as an investor, when managing your own fund and investing in other funds of your portfolio funds that you. So this is also one alternative that you can try. This is fairly new in India. Not many FOFs are present in India as of now, because investor space in India is yet have to pick up. So this I'm explore, and we expect this to grow much more, where you will see a lot more investors coming into India. And FOF is one part of it where you get to wear both your hats as a GP as well as an LP. But outside of FOF also, if you look at the investors, different diverse set of investors, be it insurance companies, they are also looking to invest in this asset class slowly and steadily. So that will also be a expected. So endowments, be it endowments, you can have any banks, treasuries. All of these are also now looking to invest into private equity and VC as an asset class. So you can also do investing in these kind of firms where you are associated and working in the private equity and VC industry. Outside of investing and FOF, outside of that also there are many other roles within the industry, private equity VC industry, that you can work on. Atul mentioned about operating roles. So actually this is picking up a lot, where after investing, the fund manager wants to add value to the business that he's investing into, and they hire a different team. They have an in-house team which actually handhold the company into different sectors. So they bring in operational expertise or expertise within that particular sector, particular stage, to help companies navigate that phase of their life cycle. So this is also a role that people can explore who are not from the finance industry but want to do something on the technical side of it. They can explore this role. Outside of this, there are a couple more fields within private equity VC industry. One is the finance role. So obviously there are multiple every fund manager would have a finance team, dedicated finance team. You can explore your career there. There is operational roles. So as the PEVC manager becomes mature, there is operations and compliance that they have to manage. So that becomes an interesting aspect. Investor relation, fundraising. So that is another aspect that you can look into. And now, which is largely picked up, is ENS. So ESG related roles. So that is also somewhere where ENS professionals can build their career in this industry. So there are many ways. Now this is booming, but there are many things that you can touch upon without even coming or doing investing. You can do many more things outside of investing also. Yes, investing itself has a lot more things to do within it, but outside of that also you can explore a lot of things. It's not that if you don't have an MBA or have not so fascinated about numbers, you can still try to explore your career in this particular industry.
Thanks, Tamanna. Thanks for your insights. Now, my next question is for Arpita and Tamanna again. For someone new to PEVC, what is this one thing about the industry you wish you had known earlier in your career? Arpita, would you like to go first?
Yeah, I think two things I'd like to mention here. One is, and this I've been hearing a lot from my partner these days, interestingly, is less is more. So you don't have to know everything, just need to know the right things. And it takes experience to know what are the right things. That's one. And second is Kanakvi and Atul and rightly mentioned about the PE and VC, how do they work? But within PE also there are funds who have different style of investing. So um, uh, and they have learned over multiple years, hidden trial, they have learned it, right? So it really because you'll be going as an entry level, just starting your career. So the firm's investing style really shapes your investing style. So your investing style should be aligned, or you should be just be wise while choosing a PE. It should not be like you've got a P entry and then you are all into it. That's my point. That's it.
Sure. I would go next. So couple of things that I would like to say, that when we look at this business, the only thing that fascinates all of us is investing. But if you look at the life cycle of this industry, it's investing, exiting, and before this it comes fundraising. So if you rank all of this, I was thinking investing is the most difficult part, but actually investing is the least difficult part. The most difficult part is fundraising, followed by exiting, and then investing. So with that spectrum, if you keep your eyes open and see that, okay, whatever you're thinking of investing, that is there, but until you exit, until you fundraise, you are actually not completed the life cycle. So you should look at completing the life cycle. Second thing that I would like to say, that this is a long-term business. So don't look for quick results. Be open to feedback. Be open to just listening and absorbing and adapting to the changes that's happening. As one of our panelists mentioned, that you would get your feedback only after 5-7 years, and actually it's even longer than that, because that is only one particular company or so that you would see. But this is a very long-term business. So if you are in for it for long-term, you're someone who will be aligned from a long-term perspective and not looking for quick feedback, quick results, then this is for you. But within that also, focus more on keeping and going deeper. So that's also one more thing that I would like to say, that have the in-depth knowledge that you would like to build, but when you articulate, you have to be very high level. So you don't have that much time to talk about. You have to be very high level in articulation, but you should know everything for the sectors or space that you're covering. So these are few tidbits and suggestions from my side.
Thank you. Thanks, Tamanna. So one more question, which I would like to ask, that how important is sector specialization when applying for PEVC roles? Any of the panelists can answer that.
Not important at all.
Not important.
Actually depends on the fund that you're hiring for. So I mean, if hiring if the job is for a specific sector, then you need to be expert in that sector, and depends on the fund as well, because certain funds will be more sector agnostic at junior level, but there will be funds which will have dedicated specialization right from junior level onwards. So one needs to do their research appropriately and figure out whether it's a very sector agnostic or a sector specific role.
Maybe I'll just allude to the point that I made earlier, that you don't, I mean, specialization in 1-2 sectors that you've worked on will really help. Even if you're coming from the operating role, knowing in depth about the sectors that you have worked on will help.
Thank you. So now moving on to our rapid fire, each of the panelists need to answer this, but I would just request to keep your answer in a very few words, and maybe at max at one sentence. So first is, PEVC is only for finance professional, yes or no?
No.
No, we see a lot of people here who are not finance background.
Yeah.
Kanakvi, Tamanna?
No, obviously, we discussed everything, that there are multiple other things also that you can do, and you can, without even having a finance education background, you can come into doing a lot of things within PEVC.
Yeah, not at all. In our fund, we have investors who are ex-founders, ex-operators, and practically none of them have a financial degree.
All right. Next is fact or fiction. The PEVC industry is male dominated and lacks diversity.
True.
Somewhere true.
It is, especially maybe it's changing at the entry stages, but
Yeah.
the partner layer still ends up being a lot more male dominated. It'll take time to change.
True. Yeah. Agreed. Yes.
True, I think that's why we have Winpe here.
Right.
It is true. Actually, one initiative that we are starting as NIIF, we are actually asking our portfolio funds to think about DEI, and not only from a just checklist point of view that you have people, women candidates in your firm. It's more from a mindset and culture point of view that, okay, hiring is one part of it, but how do you retain them and how do you grow their career within the firm? So that's one of the important thing that we will like to bring that awareness, and Winpe is already doing that. So from that perspective, in a couple of years, we will see this change. But yes, right now, the fact is that it is true. We have less, it is a male-dominated industry, but it should change for good.
Good. Next is, success in PEVC is all about having a strong network, yes or no?
No.
Not really.
Network is one part of it. You also need curiosity, first principles thinking, and good investment judgment.
I think no. It's a lot more merit-based versus networking. It helps, but not the only.
And also, sorry, Tamanna.
Yeah, I would second what Arpita just mentioned. It's actually keeping your foundation and basic strong, and keep on doing that effort, put that effort that is required, you will make it somewhere or the other. So that's the basic.
Yeah. And networking is something that you can pick on the job. So you can start with more technical skill set, and which is more important at initial parts of the career, and then you can build your network as you go along.
Next is, bias. Work-life balance is impossible in PEVC industry. Yes or no?
It's possible.
I think, yeah, it's definitely possible. You have to ask for it. So there are cycles of heavy work, and light work zone.
Yeah, I would agree that on this one, be open and open about what your ask and requirements are. Everyone would have a different requirement and require different kind of flexibility. You would require to be balanced sometime at personal level, but sometime also balanced at work level. So you have to keep that open mind that every good thing would require a balance, and the balance would tend to be one side or the other, depending on how that year is.
Okay,
Yeah.
and next is very much women-centric. The path to success in PEVC for women is unclear. Do you agree?
I agree to the extent that it also applies to males because, again, feedback cycle is so long and there's so much. I think also there's a factor of luck in especially VC when it comes to your career progression. So I would say it's unclear for both, not particularly more so for women.
And absolutely, I mean, and just from an entry perspective, any path to success, I think it's unclear to the extent that you haven't spoken to enough people to figure it out. But once you know it, then you have to ace the process. I think there is nothing standing against either gender during the process.
I think I would just agree to both of Kanakvi and Atul, but just a different perspective that because the feedback cycle is so long, you should be open to show your work in one way or the other. So if you're doing that, then you'll get recognized.
I would also like to add that although female, so there's not that it's a merit-based industry, so you would get ahead in your career if you are putting the required work and effort that you have to, irrespective of your gender. But yes, I would like to add one perspective is that as female, they go through a different stages of your life.
Yeah.
From entry till the most senior level. Across that stages, there are a lot more dropouts that happen because of lack of flexibility or lack of them not being able to stick around. So that is something that needs to change. That and outside of that, I don't think outside of that there is any merit-based consideration that goes into not having a long-term career. But that's the only thing. If you're able to navigate that phase, and every phase would be different with the kind of challenges that it has. If you're open about it and your firm definitely would work around the things that you need to navigate that phase, I think then it should be manageable and you should get more to the aspiration that you're aiming for. So just be vocal and work around a solution that works best.
Sure. And as Kanakvi mentioned, that feedback cycle is very long in PEVC industry, and Tamanna, you touched upon that continuity is something which is little challenging for women. So plugging both of these, sometimes it becomes little unclear for, though it is unclear for both men and women, but women, it becomes more unclear. All right. And the last rapid fire is investing roles are the only way of succeeding in PEVC. True or false? Just one word.
Also, yeah.
Yeah, false.
Because we just discussed everything that you can do outside of investing.
All right. I'll now just take some questions which we have received in our chat box and Q&A box. Few of the questions we have already answered. So one interesting question is, what type of rounds are there in a hiring round?
So yeah, I think I can answer. I have experience of interviewing at two shops and converting them. So, depending on the shop, but there will be a round which will deep dive into your technical skill set specifically, technical as in your financial skill set, how you understand businesses. So just, thorough knowledge of different accounting concepts is very important. And secondly, understanding how businesses actually work. So no one is expecting you to know very, specific skill set within financial modeling or accounting, but just having a sense of how margins work, how ROCE works. I think those are the things that people should know of. So that will be one round. I think other rounds will involve you deep diving into your own experience and with your investment thesis on either a public company, as Arpita said, or could be a private company as well, depending on the fund. But your own thought process on any specific company that highlights how you think about investing, how you go about building a thesis. And there you will need to be very structured and follow a very top-down approach, having a clear-cut opinion on this. Then there will be a financial modeling round in which, and depending on the fund, where you will be asked to, either do a take-home assignment or come to the office and execute a financial model in a certain time period, and also build a presentation explaining your investment thesis on that particular company. And then there will be a debrief on that front. And finally, there will be partner rounds as well, which will be more fit-based rounds and culture rounds, wherein they are looking to understand your personality and whether you fit into the culture that is already prevalent at the firm.
Next question is,
Hi Shweta, sorry to interfere. Just quickly before we move on to our Q&A, I'll launch a poll, and we'll just have the participants fill the poll. It'll take another 1 or 2 minutes. Just a minute more maybe, and we'll be good to go. While the poll is going on, I would just like to remind all the participants to join our WhatsApp group, because joining on our WhatsApp group and getting on our database also gives you the opportunity to be on our list, where we also we connect with our 30 plus member firms, and any opportunities that comes from them also goes to you. The links are on the chat box for the WhatsApp Winpe group, and also our registration link. You can fill that. Ended the poll now, and we can start with a Q&A again.
sir, next question, I think, Kanakvi, if you want to take it, how do investment professionals hone their investment judgment? Any advice for entry-level folks?
So I think this is something that you are learning on the job, and this is the one thing that you're actually learning on the job in the first 2 years. It just takes a lot of doing it. So when you're, assigned a company to evaluate, or you've come across a exciting company, you have to go into the weeds to understand what are the right questions to ask. What is the level of work that needs to be done to answer them efficiently and effectively? And then are you able to piece together all of that information that you've learned over the course of evaluation to actually come to an answer of whether you should invest in the company or not. And this is an ongoing process. You can make it more deliberate by having check-ins with yourself around what did I get wrong on a previous evaluation or a previous company, tracking them around their progress after you've made a decision around whether to invest or not. You can also talk to seniors and other people in the industry about how did they think about that particular company in that particular round or any previous round that they would have looked at. So it is a little bit ongoing, and it's very hard to say what exactly needs to be done to hone it further, but this is an ongoing process in my mind. Just be more deliberate about it and have feedback chats with yourself.
Great, thank you. Next is, how has PVC industry evolved in recent years, particularly with the rise of ESG and impact investing? How can candidates align themselves with these trends? Tamanna, would you like to answer, since you
Yeah,
talked about DI and other sectors where NIIF is
sure.
currently working on? Yeah.
So ESG and impact, firstly, I would like to just put things on the table that ESG and impact is embedded in most of the investment that mostly all the fund managers would do going forward, because we would not like to harm the environment or not create an impact. The way we think of it is that even if you're commercial first, right, which we are, which NIF is by that way, that we would like to have more and more returns and commercially do well. And we feel that ENS and ESG and impact, if impact is an outcome, basically. ENS is a process that you have to follow to ensure that you're not doing any harm to the environment or social factors, and impact is outcome. So if you create good businesses, you invest in good business, and these businesses become bigger and bigger and better without impact, without having any negative impact in environment or social factors, you will automatically have some kind of impact. So that is definitely an outcome. You don't have to invest to create an impact. If you invest looking for creating good businesses, it will come. So that's there. On ENS and impact, yes, there are certain things that you have to be mindful of, and that gets embedded in your investment decisions, that you cannot only look for returns harming all of these things. So everything has to work in parallel, in tandem, which is something you have to be. It's also one of the criteria that you would think of, that is this investment, instead of having more positive biases, it's more like a filter. Will it create any negative impact? And if it does, then that is something that you will think about. But positive, it is fine. Then it will just go ahead with your investment. That is it aligned with my thesis? Is it aligned in giving me the results that I'm looking for? Then definitely you don't have to lower your commercial bars on that. You will definitely keep your commercial bars higher, and that will come as an output. So it's more of a process that's embedded.
Thanks, Tamanna. Next is very much related to sector thesis. If Arpita can take it up, if you want, Arpita, can someone share resources for how to do a sector thesis for landing a job?
I think starting first would be to just do some desktop research. There are a lot of listed companies out there who would be working in that particular sector. Then once you have, and then going through who are the key players in that company, what are they doing differently versus how the margins different, etc. Then moving on, talking to some folks from from particular sector, and most of the time, not most, but sometimes you can get it in your vicinity also. And LinkedIn reach outs really help to just think how if one person is working in the sector, to think how do they think about that particular sector. So those are few things that I would suggest.
There are a few more questions which others have also voted upon. Another is that I want to ask that apart from working on technical skills like modeling, what else they can do to so that their application stands out when they are doing cold emailing?
I think one thing is to just show that you can already do the job that you're signing up for maybe earlier stage investing or maybe more aligned to VC, would be just being able to cold email with maybe startups that you're excited about that also fit the strategy that fund is doing. So being able to tell them that you can look at these 2 startups and consider investing in them, and here is why I'm excited about it. I think that is very powerful. because that shows that you're already plugged into the ecosystem and have the skills to do what the job requires.
Next question is, audience is asking, can we connect to anyone from the panel for being a mentor in case we align?
Sure.
So I think they can reach out to you on LinkedIn.
Yes.
Yeah.
All right. Next question, which is, I think Atul was focusing a lot on financial modeling. Somebody has asked that, are there any online resources on how to learn to build an financial model? And are there any presentations on it, or are there any courses which one can do?
Yeah, I'm sure that you will find relevant content on YouTube itself, which will be free of cost, through which you can learn how to make a three-statement model. And if you're applying to late-stage shops, then also awareness of how an LBO model works, that will be helpful. And there are other paid courses as well. I'm not familiar with them, but very sure that there are enough resources out there through which you can pick the skill set.
For people who don't know it at all and are trying to pick it up, like I was, maybe Wall Street Prep is a very good one where they take you through every financial statement one by one and you end up doing a paper LBO.
I think I just want to add something here. After you've learned the skill, it's very, very, very important that you practice it on your own. And by practicing, it's not like a shell company that you're working on. There are few key metrics in a financial model, which is very important in terms of how is the revenue build up, and that's different for different industries. So you should be able to think how a revenue build up works for different kind of industries, both from an early stage and from a late stage perspective. So practice is very important.
Thank you. I think we are now almost on the time limit. I'll take one last question, that what kind of culture fit are the PEVCs looking for when they, as Kanakvi rightly mentioned, and Atul mentioned that in the beginner's interview, nobody is looking for a specific skill set and expecting you, to be a master on your skill set, but what kind of attitude and culture fit these PEVCs are looking for?
I can talk about our fund. It's hard to answer it in a generic way because someone, like I think Arpita mentioned, that every fund has a different culture and a different investing style. For us, we're just looking for curious, hardworking folks who are also nice people, but they have a chip on their shoulder and they really want to win.
I think what works for us is great professional ethic. Yeah, and curious people, open to learn, explore.
Something that works for us is high on attitude, like light attitude, very dedicated, hardworking. Outside of that, be empathic towards everyone in your team and your overall people that you're working on, and not have confidence but not overconfidence. So that would help.
Yeah, I think same, hard work and intent. I think no one is really born an investment professional, but you really need to be willing to roll up your sleeves and work hard, and also show positive intention of picking up new things and being curious and being open to things, which is very important, especially in at least initial parts of the career.
I think one more last question, which I'll take, that how does one find a mentor outside the firm where one is working?
I think Winpe also has a program to this effect, and there are really senior folks in the industry who are part of that as a mentor. So that helps. Yeah.
And I think Tamanna touched upon that IVCA also keep organizing these sessions, and if you keep attending, then maybe you will find
Yeah.
it again.
Yeah, if you're not from the industry, try to look for conferences or sessions that are being conducted, or be a part of those, at least get some connects. Once you know someone, I think the people in this industry are approachable. So they will talk to you if you are coming to talk to them. So that's how it will work.
And also, I think, reaching out to your own alumni who are there in the industry, that is one of the ways you can connect with people. I think, and cold emails also work. So, for example, when I was looking to enter into the industry, I was definitely helped by a certain individual who used to take on like 5 to 6 mentees each year and really help them out. So there are enough people out there who are, willing to help people get into the industry. It could be frustrating at times because you could be writing bunch of cold emails and not receive responses, but I think it's more about just expanding your reach, and maybe you'll find someone who will be more than willing to help you.
So, Atul, you mentioned that you reached out to some mentors who were taking 5, 6 mentees each year. So, how did you find them out?
No, so I mean, it was a coincidence that he is also an alum of ISB.
Okay.
So that way, but I know that that particular person also mentors people who are not from ISB, for example. So doesn't really matter. I think, yeah, there is no other way to know about it because this won't be posted online. But as I said, it's more of a trial and error method. And I mean, if you think from people who are already working in the industry, right? So depending on when they're receiving the cold email and how their work situation is, that also dictates whether they're likely to respond to the cold email or not. So just that's why you have to really expand your reach and try to reach to as many people as possible. And probably, your hit rate could be like 20-30%, and then try to, inculcate a relationship and then take it forward.
I think one very good cue which you have given now is that reaching out to your seniors from your alma mater. So I think even if you send them a cold email, they are more likely to respond because your institute or your alma mater is really close to your heart, and you would definitely like to help those.
Yeah, and also maybe someone who has taken the same trajectory that you are likely to take. So let's say,
Yeah.
for example, if you are a chartered accountant working in a certain organization, then probably reaching out to someone who has taken that trajectory, or some engineer who has gotten into investing directly. So that, incorporating that relatability into your reach out would also be very helpful, because we are likely to help, people who are in our shoes 5 years back.
Very good. So I think we have covered most of the questions. So we'd like to end the session, or if anyone has any more questions from audience, you can raise your hand, or again put your questions in Q&A. Otherwise, we'll end this session. Nothing. So now just my closing remarks, that thank you all for your insightful contribution and sharing your experiences. In fact, I also personally learned a lot of things even after being in this industry for such a long time. It's been a pleasure to moderate this discussion. I hope our audience found it as inspiring and informative as I did. Let us continue to support and empower each other in our careers. Thank you.
Thank you.
I would also like to add something. Thank you everyone for joining us, and hope you found this session useful. Thank you to our speakers, Arpita, Atul, Kanakvi, and Tamanna, and our moderator, Shweta, for the insightful conversations and lovely insights. Requesting everyone, all our participants also, to please share your key takeaways of this session over social media. And when you do so, please use the hashtags hashtag Winpe and hashtag WinpeIgnite. And don't forget to tag Winpe. We'll also put the hashtags on the chat box below. And once again, please join our WhatsApp group and our database so that we are able to share your profiles with our member firms to support their hiring processes and also support you with all the other job opportunities. Please join our, we also have our annual Winpe, we call it WLSA, which is our Winpe Summit and Awards ceremony that's happening next year in March. So please join us at the annual WLSA event for the PVC industry in March 20th. So it's happening on the March 20th in 2025 next year. You can get in touch with Winpe for more details on it. You can also check the Winpe website for more details, and stay connected with us for the master classes that we have scheduled for January next year in 2025. Yeah, that's it. Wishing you all a very great holiday and a happy new year. Hope to see you all again.
Thank you.
Thank you.
Thank you.
Thank you, folks.
Thank you, everyone.